All right, guys, another Sunday scan coming at you for June 6th in the week ahead. Same stuff's working and same stuff's not working. So not too much to talk about as far as adapting, but each week I try to go over something that I'm going to try to do better and what I could improve on, and then also discuss what has been working and just different changes that I've made. But the last couple of weeks has been pretty similar. We're in this kind of holding pattern of just unknown, right? Are we going to break out? Are we going to break down? As soon as it looks great, we're, back to lows. As soon as we're at lows, we're back to, are we about to break out to the upside? So we're still in that directionless market where you just need to be a trader. And it's been fantastic. There's been a lot of opportunity. For me, it was only a 4-day work week, obviously, with Monday off last week. Tuesday and Wednesday were really big days for me, but Thursday and Friday I minimized. And I minimized because of a couple of reasons that I'm going to go over and how I plan to fix that this week. But first and foremost, Imen Ajmi. If you're in the US, you've got Icon Meals. If not, we'll ship you some t-shirts. And then I will pick another Icon Meals recipient for next week. As you guys know, each week we always pick a winner. T-shirts, scans with a Z, IU, and Icon Meals. And all you have to do is just leave your key takeaway, a comment, whatever it may be, with the timestamp. And as you've seen, we make nice little micro content type of videos from your key takeaways. So I appreciate you guys taking the time to do that. It helps us. And in return, each week I try to pick a new member or a new commenter and reward with one of those 4+ prizes. Also, t-shirts, J-Man Trading and Kim Alanis, Alanis. You've got the t-shirts for this week. One of the key things that I wanted to start with, last week I talked about liquidity and kind of getting those partial fills on size and the importance of kind of being there and having your orders kind of ready, either, set up already there, limit order with a bid in, looking for the cover, or an offer out, looking for the exit. And some of the comments were, here I am on the video, talking about size that maybe the majority of you, are never even going to have to worry about. And sure, I get that takeaway, but at the same time, it's about kind of preparing and trading properly, anticipating these types of situations so that you're better prepared, later on. And it doesn't really matter what size you're technically trading. It's the same concept. And you saw this week, when stocks come back, they tend to revisit the same levels. So I'm always looking for congestion areas where there's been a lot of volume back and forth. There's been a lot of indecision. It looks like it's about to go. It looks like it's about to break down. But there's a lot of volume that just kind of goes back and forth at a particular level. Those are how I develop my key levels. And so what I did well this week was I did not scale against any trades. And you guys know that I like to put on a small feeler. That's never a big position. It's never something that's going to hurt me. It just gets me involved in the trade. So then I start to zone in a little bit more and be able to get the reads that I typically do on these particular names when they do have the exchange, when they do have that fail follow through momentum, and be able to react accordingly. But this week, like I said, Tuesday and Wednesday were big for me, but Thursday and Friday I had some major trades. Friday I had SIGA, major trade, and then I think it was AMLX was another big trade. And the other ones, VTNR I put on a little bit, VERU I put on a little bit, and AI I put on a little bit, just starters. But there really wasn't a reason to put on a starter, and I probably kept it a little bit too long compared to what my thesis or thought was. And what I mean by that is there was plenty of times where it came back to my levels that I had dabbled in. I put in a little bit just to get a feel for it, but it came back and tested that level. Came back and tested that level. Came back again, tested that level, and headed higher. to me, there's no reason to be in that trade any longer. And the fact that I kept some of those starters, that's just wasted capital, wasted mental capital too, not just money, but mental capital, right? It's taking a place in your mind, in your brain, taking energy from you to manage that position, but it's not really doing anything for you. It should be working for you. And if it's not, then you shouldn't be in. So that's the pros and cons of having a starter is you still need to respect the front side of the move. Otherwise, you're just kind of giving away, you're donating back to the market for no real reason. It doesn't mean that it's a big loss. It's just, it's an avoidable kind of silly, all right, I probably should have been out 10 times, but instead I just let it grind because I don't have any size. And, that's going to happen. It does happen. But going back to the point of, talking about liquidity and size and all that kind of stuff, these videos to me are those verbal reminders to do the right thing the next week and kind of looking inward. I tweeted this week about looking inward versus always looking outward for reasons why something didn't work. And a lot of times when I'm talking to traders, one of the biggest things is that they are focused on all these different reasons why a particular trade didn't work, except the real one, the one that they can control, the one that they can come back and fix and not do again the next time. But instead, they've taken this decision to say, okay, this is the reason why it didn't work. And when that trade comes along again, you're going to make the same mistake because you weren't honest with yourself the first time, right? Oh, it was this newsletter that came in, or it was this particular news or PR or tweet or this or that. Not because you knew to be out, not because you sized in on the wrong side of the move, not because you were trying to find the top, not because you were trading a low risk type, a low reward, high risk type of trade, a 50-50 kind of shot. Not any of those reasons, but just because this tweet came out, right? That was your key takeaway why this did not work. And the reality is that you're going to repeat that same mistake over and over, right? Because you never learned from it the first time. So make sure that you're going back and you're like figuring out why. Why did you lose on a particular trade? Why did you overstay? And when that happens again, be done with it. And so that's how I'm going to try to improve this week is, I just gave back unneeded money on some of these starter positions, which typically I'm pretty good at. I'm pretty good at not doing that. And as you guys know, I usually start in, and as the trend breaks, I start to scale in. But in this market, we've got that steady grind higher and higher and higher. So you want to just be super cautious, getting in front of it. And even if it's small size, I didn't add to it, but it still can add up and it still can be a pain. And so I just want to be aware of that. So that's sort of my goal for the week ahead. Summer trading, everybody, a popular question is always summer trading and how are you going to change? And summers are always slow. They haven't been slow for the last 2 years, 3 years, maybe 4, and we always talk about how summers are slow and everybody kind of expects it to be slow. But really it's just about shifting into, what's working. So, if you go back over the last week and a half, are small caps really, really hot, or are we only getting 1 or 2 names per day that are running? Technically we're only getting 1 or 2 names per day that are running, but we're getting large caps and mid caps trading like small caps, right? Where they've got the 20, 30, 50% type moves. So, there's plenty of action out there. And I think that's another one of those inward versus outward type things. Is it really slow, or are you just using, it's summer and it's slow as an excuse for not adapting and kind of being open to understanding other ways to trade, understanding other concepts, understanding, other ways that you could adjust to make the same trade, work for you a little bit better. So just think about those things as we head into summer. But as I've been trying to, I'm not being super aggressive. This year's already been fantastic. And I want to keep it that way. I've said it and I've reminded myself every Sunday, be aware and have my guard up. Don't get in a situation, just because it's nice out. I want to press so that I can take X days off, whatever. No, you can just take X days off. You don't need to press to take those days off. So be aware of the thin tape. You've seen it this week. Things can continue to grind higher and higher and higher. DDOG this week, Starbucks this week, Microsoft off the gap down just went straight up. I think it was like $10 or $15, right? So those are good examples of why you don't add. And I used to do that all of the time, and I understand, why. It makes you feel like it's about to turn, and then it goes right back up. So one of the best things this week, the last couple of weeks that we've been talking about, AI, NIO, what else was there? Maybe even SIGA, just being patient, right, for those key levels to break. And that's fine. Maybe you have a starter and it slams down and you're like, yes, I got a good trade on, I'm going to add more. And then it kind of ramps right back up, right? You want to let that slam prove that the sentiment has shifted. You want to let it prove that it's going to stay heavy. Most people assume it's going to stay heavy, and then it swipes right back up, and you're stuck with more size, and you ruined your starter entry. So be aware of that. Same as always, 1 to 2 main watches, main ones that I size into, and the rest, I just put on feelers. But again, those feelers this week, I need to be aware if they test 3, 4, 5 times, it's wasted capital at that point, both in money and energy, and just move on. And there's no reason to kind of wait for it to turn, especially if it's not suggesting that it wants to. I think that's it besides Traders for a Cause. And so September 30th to October 2nd. So October 1st was the weekend that we're targeting this year. So it's basically that last week of September. So Thursday night for sponsors, VIP is typically the VIP party for all sponsors and speakers. The Friday is, think we're trying to figure out golf, poker tournament, lots of different stuff this year. And then we've got the conference on Saturday and Sunday. So last year we sold out within 24 hours, right around the 24-hour mark. Legitimately, not a sales pitch type, hey, we sold out, buy now type. We sold out in 24 hours. So I don't know if it's going to be the same this year, but if you're thinking about going, then, make your plans. And we will be announcing when that goes on sale. And I think we're probably going to sell it in the next probably 2 weeks or so. But like I said, last year went fast. Then we opened up a few more tickets just because if you sponsor, you get 2 tickets, 5 tickets, 10 tickets, whatever. If a 10 ticket sponsor is only bringing 4 people, that's going to allow us to sell 6 more tickets. So just keep that in mind that, if we do add on a few more, that's where we get them from. But last year it was, gone in 24 hours. So I hope to meet a lot of you guys there this year. Every year just gets better and better. We've met a lot of solid people. We've got a lot of great speakers, and it doesn't matter who you are, it doesn't matter what level you're at. You can always learn from somebody else. I go there, I learn from all these different types of traders. And if you take one thing away from each person, you never know what it could even be life related, unrelated to the market. If you take one thing away from each person, just think about how much better you're going to be, leaving that conference. So anyway, that's really it. I would say the main thing that I've noticed myself kind of getting, I need to be more aware of is not getting stuck. And I'm not talking about stuck in a bad position. I'm talking about just getting stuck, kind of staring at the screens for 2, 3, 4 hours of a stock that's kind of just, in a channel. And, I got to figure out, okay, after an hour or after 30 minutes, that's not doing what I expected. It's just kind of sideways. Then either size down, size out, put a stop in, but don't stay at the desk just because you've got this position. So I just want to be aware of that because I know that I could do better there. And there's been at least probably 3 or 4 mornings out of each week where I've literally crushed it, and then I'm just kind of sitting there babysitting this trade, and it's such a small amount compared to maybe what I had made earlier in the day. Why am I staying there? So just being aware of that is going to help me prevent it. So, all right, let's get right into the Sunday portion of Scan. All right, guys, so for the second part of Scan, as always, I go over what I'm looking to trade, what I think would make a good trade, what I would do if certain things happened, how I determine those levels, and all that good stuff. Basically, how I come prepared and what actions I would take if certain situations happen. So with that said, I am not a financial advisor, and these are not buy or sell recommendations. This is for educational and informational purposes only. So if you're not okay with that, stop watching the video. But as long as you understand that my goal here is to kind of share exactly what I do to make sure that I'm comfortable and confident coming to the market each and every single day. This is what I do every single night. I look over the charts, I stay familiar with opportunities, I set price alerts, and that's exactly what the goal is with these scans. So AMC has been a phenomenal trader. It's really offered a great trade every single day. Sometimes it's stronger than GME, other times it's weaker. But it's good to have GME up there. GME had just reported, right? So that becomes almost the index of the memes of AMC, BB, BBBY, all those trades. Just like way before, we used to watch just GME or AMC to determine what we're going to do on the rest of the trades. In this case, GME was kind of showing its hand, being a little bit stronger, and then AMC would start to come up, with it. But for now, we're starting to get into a little bit of a channel. Oops, let me just get a horizontal line. You can start to see like this kind of consolidation in between 129s and 134.50s or so. And so that translates into AMC as starting to tighten up the trend. So what you want to be cautious of, getting caught up in the tightening range. So the areas of interest for me on AMC and the way that I develop those kind of levels of interest, look left, look at where it had support the last couple times, and then look at where the support ended up becoming potential resistance. So any good pops versus 1265s, 1270s, plus or minus a few cents, I'm looking to fade. Patience under 1230s. But if I were to short into a ramp, 1260, 1270s, and it was fading down, I want to assume that 1230s is going to hold. And we talked about that all week in the room, proactive covers. Assume that the prior levels are going to hold. If they do not, and it starts to break down, you can always rescale. So for example, if you had, say, 5,000 share starter, you added to 10, you went to 20, went to 30, you covered 20 into that 1230 line, assuming it's going to hold. It starts to rebound back up. That one allows you to have lock sum in, and two, it allows you to be thinking non-emotionally and ready to re-put on some size if you wanted to. You're trading around that core. If it stays heavy under 1230s, you can go from 10 to 15 to 20 as it starts to fade off, and then you start to use your 1230 as your adjustment level. If it starts to firm up at 1230, then why would you want to stay short? So that's just sort of how I come prepared for it. But AMC is more of one of those daily drivers, and you've noticed a little bit of shift on these Sunday scans. I'm not super aggressive, like this is the one, this is my focus. It's about pre-market right now and coming with two main ideas out of the open. And typically I've got two small cap ideas and then two mid to large cap type ideas with good range, good liquidity. And then SIGA was the main watch on Friday. I actually was getting short into the, I was almost the top here. 13, I think it was a little bit higher earlier. 1341, I believe it was over here. Yeah. Into this candle, I got some into here. And so it was a nice flush. I actually added some, but basically my level and what I wanted to see happen and what I wrote in the room, 1335 to 1340. I basically wanted to see this level push out, exhaust, start to come back in, retest, fail, and then I'd be sizing in the rest of the way. And that's exactly what we got. and I ended up covering right into this bottom of the flush, resized in along the way. Ended up being a phenomenal trade. It was my best trade of Friday, but again, I still minimized the day on stuff like VTNR, VERU, and AI. So again, that's why my focus this week is to do away with the ones that are kind of grinding me while I have a really big trade such as this one. So you can see on the daily, you can see that the wicks are kind of getting supported still each time it gets bought up. So you want to be cautious getting too aggressive. You can see that there's some good support in the 1120, 1130 range, right around there. So if it comes into that level, you want to assume, be cautious getting too biased at the lower end of that daily chart. But if it stays heavy under 1110s, under 1120s, then there's a good chance that maybe we're on the backside of the trade. One thing that I would encourage you to kind of check, which is also, I think, Veru is another main watch. But we've got a similar situation here where, you had the breakout, came in, another squeeze, and then it flushed. And it actually flushed under that key level. You can see on the daily over here. Flushed everybody out and then came back hard, right? So just be aware of that. Something like SIGA does have that potential if it flushes under that daily support, such as the 1120s. Say it goes down and it wants to test back to over here, this 1040 level, 1030s, that's all very possible. But when it rebounds, just be cautious of doing the add thing, because that's where I think a lot of people get in trouble. So anyway, very good trader, higher the better. Every headline is getting sold into at this point. So I do think we're going to have a nice unwind trade. But for me, quick look, based off of the action, you can see that pretty much 1170s was the top, right? And then 12 was the kind of exhaustion level. So I'd love any good push towards 12. And if 1170 stays heavy, then I want to be patient and kind of let it work. And then I'd probably want to assume that the 1130s is going to base, just because that's where, and yes, it did go lower, but I want to look at where most of the congestion is. Where is most of the battle, back and forth? And that's right at that level there. AI has been just like TDOC. If you guys remember, ended up being a fantastic trade, but we had this gap down and then this rally, and same thing we had CHGG, and we had this gap down and then rally and then it came in, right? So just be careful of that. So far we've had like a Dix style move where just gap down, everybody that wanted to sell sold, and then they bring it back up. We are at daily chart resistance. So a lot of times what you'll see is it blow through that, and everybody's like, okay, we hit the bottom, we broke out. But really it's just running all the stops that, are basically using this daily resistance as sort of a key level. So if we were to go 2050s, 21s, maybe even higher, in my opinion, that's the day that I want to be sizing for it to come back, reject back under this level. So a lot of times we see it come back through that level and then sit right back down. We've seen it on a lot of like big breakout charts where it comes over a key spot on the daily where it's kind of come up, finally breaks through, and then it just comes apart, right? I'm not saying that that's what's going to happen, but that's the kind of move that I'm kind of looking for, where it comes back and tests these prior levels of resistance. It either goes through it, comes back down, and then unwinds. So that is all potential, but you're not going to get, if you try to find the top, if you try to, time it, you're just going to be kind of donating money until, you get exhausted and then probably miss it. So anyway, other ones, VERU, higher the better. I think they present, I don't know the time, but I put a link in the scan. But be aware of that. But I'm looking to trade it. Should have a trade like SIGA, SIGA. So higher the better, and hopefully at some point they pull the bid. But if it stays strong and it continues to go, I'm not afraid to go long either. So be patient. Let this thing kind of do what it wants to do. But we are in this little bit of a tug of war kind of channel right now. There's a lot of resistance, a lot of congestion in this 14 1450 area, and then there's a lot of support in the 12. So mid 14s, low 12s, there's the channel. So anything over it, let it exhaust out, and then wait for it to kind of come back in, and I think there'll be a nice opportunity. AMLX was great. Very clean trade, very nice opportunity off the open. You know, you can see the congestion back and forth. The only thing about this one is, I wanted the size, I wanted to scale, and I did size decently, but I didn't go too aggressive, just because, these moves are aggressive. They are, especially if you have size. And when it goes from 13 to 1380s to 1320s to 1360s to 1290s, it's up, down, up, down, up, down, up, down. And if you've got size, that can take a toll on you. And if you've got too much size, then you might be getting emotional, versus what is pretty clear to be, a little bit of a exhaustion zone from pre-market, right? So we always like to see it exhaust through that pre-market level and sit back. But if you go too aggressive too soon, then, you're not going to make it. So I positioned accordingly to make sure that I wasn't, going to be emotionally tied to it until it started to confirm my thesis under VWAP. And then you can, obviously scale in from there. So same concept with SIGA. You don't want to get too aggressive prior to 9:45, 10 a.m. because you never know when you need that extra little room, right? And so the idea here is to feel comfortable on the trade. You never want to feel, too nervous or it shouldn't be a situation when you're at your desk and you're kind of sweating over a particular trade. If you are, you shouldn't be in the trade. You should feel comfortable. You should feel confident. And it should just be, a trade. You've got a game plan. You've got to stop. If it hits your stop, it hits your stop, right? But if you're sweating bullets and you feel like, oh, I don't know what's going on, then it's probably because you're in too big or there's not really any edge. And that's really what it comes down to. So just always reevaluate your size, your position, what it's doing. Should you adjust? Should you size up? Should you size down? And check in with yourself every 15, 20 minutes on a particular trade, or every time it has a key kind of test. On the failed follow through section, I've just got a few that I'm watching. IOVA, pretty nice rally. This one's steady all day. The level that I put in the room on Friday was 740s. So, I participated, and you can see that, pretty much 770s area, 755 area. There's a lot of consolidation in these two spots, right? So I had put on a little bit in between this channel over here, good entry, anticipating that, it might break down. But as I said in the room, I wanted to see 740s confirm, fail to follow through in order to scale into the trade. So this is one of those where you just, maybe I have a starter. I end up losing 10 or 15 cents on the starter. Had it broken 740s, I would have scaled in, sized up, flush out, cover 680, something like SIGA. But it's a good example of why you draw lines and you just wait for it. If it doesn't break, then there's no reason to either A, trade, or B, scale against, when you just had a starter on. So make sure that if you are somebody that likes to position in just to get a feel for things, make sure you're not fighting the trend. And I know I say that every weekend, but for whatever reason, it's a hard concept for people to get. NRGV still daily watch, set the price alerts, wait for it. The day that it's down 2 is probably gonna be down 5, 6, 7. So maybe not 6, 7, but if it does go 18 or 20, maybe so. But just be patient. Wait for the day that the bid kind of spills. AVDL was another one of those where it was just soaked up. We talk about this all the time, liquidity trap type situation, 162 million shares. And I talked about 225 being a key level in the room all week, right? So every single time it came down there, I had mentioned, we're testing that key level. So this is about, understanding what level is, where is the congestion and where are they soaking? And this is exactly what happened at 225. And every single time you can see that overall they soaked, they absorbed. And so at this point, I want to be watching for any good exhaustion moves. And you can see that pretty much this 260 level was, exhaustion each time. Yes, we had some push over it this day. But the idea, the concept for me on Friday was any good pushes for a fade. I got in there, but it's still super, super thin, to be quite honest. And this right over here, I just had a TWAP kind of cover where I had over a 5 or 10 minute period, I was covering, X shares, and, it just starts to ramp up. So point being is that, it is still relatively thin. So you want to wait for the trend to shift and confirm. Because if you're anticipating this on size, you will probably get chopped up until things start to shift. Other than that, I've got a little bit more on continuation side today. You had HUSA, you had MARPS that goes with it. We got INSV, NINE, and USEG, right? So all the same basket names. The thought process is potential continuation given, USO is going nuts, continues to break out, OXY continues to go. SEO is opposite, right? So when things are starting to come in on USO, you might have a trade on SCO. It's always good to know the opposite ETFs if and when the trade does come. But other than that, we've got Jewel. Jewel, you can see they're starting to soak it up again. And in my opinion, this is the Clue team. This is the BLBX team. This is the IMTE team, right? So they do the huge liquidation trades, and then you see them starting to come back into the market to, do it all over again. They did it on DOGS too, where they came in and they did the liquidation, and they soaked it up and, did it all over again. So that's what we've got right now with IMTE and this Jewel. Some people are trading it long, and that's great, and it's a good trade, but just be aware that these are not, these are trading vehicles. These are highly manipulative types of names where you could be dead right and then dead wrong in a moment. So it just depends on when the pump stops. Couple other ones, no positions, RDBX. We talked about this one being a potential squeezer. Then it had a huge, nice move towards almost 10. It was like 940s, 950s. Then it came in. It's consolidating again. So it's worth watching. If it starts to break higher, we might have another one of those days where it goes, $9, $10, something crazy. So just be aware of that. But a couple people were asking me if I still had, if I was still thinking squeeze. And the last time we talked about the squeeze was over here, and then we had a huge breakout. So now we've come in, rechecked in with the VWAP, and, it's consolidating again. Do I have a strong opinion? No. Do I think that it could go? For sure. It keeps on coming back more than it should, but we'll see. I think that there's a lot of misunderstanding with the deal that they're doing, and I think that the fact that it has options, I think a lot of people sold calls and ended up in a tight spot. So we'll see. If it's gonna go, it's gonna go crazy. But if not, then no trade. So we'll see. Right now, no trade at all. If I did trade it, it would need to have high volume, good action intraday, 9:45 a.m. plus trend join, and stuff like that. PBDS, no position, nice buyer and tape on the daily, just notable. To CI, same thing. This one, I keep on thinking about buying it. Insider's been loading up like crazy. It continues to go. This one has a big history too. So at some point, if there's a reason for all these insider buys, it could go nuts again, especially if they soak a decent chunk of stock off the market. HSDT, last one, potential liquidity trap. No position, but watching dips verse 2 if it holds. The day that it had the 40 million, it was pretty standard, easy fade, right? I shorted it, faded it. There's been no real reason for shorts to cover until Friday when it bounced back up, but there wasn't much volume. So there is that potential of the liquidity trap situation. But that's about it. So I think we have a deal for Investors Underground. If you guys are interested, it'll be in the description. And I hope you guys enjoyed. As always, leave a comment, leave your key takeaway, timestamp, all that good stuff. And we like to give away free stuff. So thank you guys, as always, for watching, and we'll see you in the room tomorrow.